Hi there, good morning. Welcome to the trade setup right here on BloombergQuint Live. It's a nothing kind of a morning, I must say, if you're looking at the equity markets, but lots happening beyond that. Now, first, something that we haven't done for a while, but somehow we thought that this morning was important. Some COVID updates. Much as we think that we are unlocking and on the way, and yes, that is true. But look at the speed bumps that keep on coming. So Australia's lockdown has widened. Perth has been locked down after Sydney. Hong Kong is banning all passenger flights from UK, so that is interesting. There's a new study from the Oxford University which shows mixing shots from Pfizer and AstraZeneca creates a stronger immune response. Somebody sent a message to me that the gap between two Covishield shots, if it's 45 weeks, then it's an even stronger immune response. So who knows, but really there are new studies coming up every now and then. And if you look at yesterday, European stocks, they fizzled out as COVID cases battered the travel stocks big time. I mean, the travel related companies got really battered in trade. So the question here is, how can anyone be so certain that things will return to normalcy, and would therefore people bet on the same travel related COVID companies impacted by COVID as heavily as they otherwise would have under normal circumstances? I frankly don't have an answer to that. Yes, a lot of people do, and a lot of people believe that hotel bookings, blah blah, etc., would be gung-ho, but just look at the gyrations that are happening every single month. We had thought that Israel is out of all problems and they have reintroduced masks, so who knows. Anyways, so the world equity markets, US markets were very flat. There are hardly any move there. So actually, even if I don't point out what the US markets did, it's okay. Yes, you could argue that the Nasdaq had somewhat of a move, but S&P 500 and Dow extremely fat. Just hardly any move there. Now there's this interesting chart on the Bloomberg terminal. I would want to bring it to the attention of our viewers. It should come up on the screen next. And the S&P 500 index has breached the upper band of the trading envelope for a second day. So the point is, do small incremental gains as well signal a trend? And I'm not a technical expert, so I can't quite give you an answer to that. But I think if any of you look at charts or know people who look at charts, should try and figure that out, whether incremental upticks could actually help us lead to higher levels, or even if they don't lead to higher levels, if it leads to the market staying constant, would the broader end of the spectrum react positively? That's the question to everybody's mind. I don't have an answer to that, frankly. I hope somebody does. Asia and SGX Nifty 2 would be pointing towards a mixed bag start, some red in there, some in the red, some in the green. In fact, most of the Asian bourses are actually correcting a bit. The S&P 500 futures are still flattish, by the way. The SGX Nifty, I reckon, would be doing no different. So we'll have a flattish to a marginally negative start, I would reckon. It should not be a deep cash today. So what is the SGX indicating? Yeah, about 0.25%. Frankly, even if it would have indicated something otherwise, it wouldn't have made a difference. I think the view would have remained the same. Now, the key is, in a market like this, wherein it failed to see any kind of cheer even for the FM's announcements yesterday, which a lot of people frankly say is old wine in a new bottle, be that as it may, the MOV function on the Bloomberg terminal will show you what the market breadth was and what's the nature of the stocks which did well. I mean, naturally, I don't need to tell you PSU banks were the showstoppers in trade yesterday, and sugar, much like we discussed, did really well in trade yesterday. But the MOV function will come up next, and you will see the market breadth. So for a second day on a trot, the advanced decline ratio was positive, and which is something that is heartening, by the way. Even if the markets don't really make a big move otherwise, the advanced decline ratio being positive is great. But look at the list of gainers, and you will see some sense. NALCO was, of course, ahead of the results, some big big move, 2 days on a trot. But look at the others: PSU banks, sugar, DCM Shriram up 7%. In fact, everything from a Dhampur to a Triveni to a Bajaj Hindustan, Balrampur Chini did really well. Some of these are not a part of Nifty 500, so they won't feature here. But that pocket was active, and PSU banks was active. So no surprises thereof. Now, what should we expect today is the key question, right? I would presume a day of quiet trade with maybe some upward bias in the mid cap. So that's probably the trade setup for the session today. And I mean, sure, it changed a little bit, but I think this is what is likely to happen. Now, oil slipped a little bit after hitting highs. We know that the upstream companies are anyways lethargic. Could this hit them further? That's the question. And I'll give you the counter to this in a bit. And do watch out that everybody talks about. I got 3 or 4 queries yesterday about whether sugar stocks look good or bad even after such a strong up move. Now, I don't know whether they look good or bad, but the point being that you got to figure out which part of the cycle that you think sugar stocks are in and what valuations they are trading at. Even after this up move, most of the sugar names are trading still at single-digit FY23 multiples. If you believe this is a 3-year story and this is a cycle, then single-digit multiples is probably not a bad price to play. But it is really to each their own. So please do your own study before you try and figure it out. And just keep in mind, viewers, just before we get to specific stocks, while oil has slipped and it may impact the lethargic oil companies, but a lot of people are floating the message of the ONGC chairman is having said that gas prices will move up by 50 to 60% in the October revision. I think in the con call as well, I heard him, or rather I read him. I read what he had said, which was put out by people. He said that they made an appeal, which is what the Oil India CFO also said in an interview, that they made an appeal and they believe logically that gas prices should go up, ideally by 50 to 60%. That is warranted and all of that. But can the ONGC chairman say that gas prices will get revised upwards? No, he can't. So please keep that at the back of your mind. Now, the stocks may react. I have no idea. But yeah, there is, I think, a Financial Express or a Business Standard or an Economic Times article that is now floating around that this is what will happen. I have no idea. Really, I doubt that the ONGC chairman can make such a statement. He's saying that the gas prices could be revised downwards or should be revised upwards, rather. Not that they will be. Anyways, stocks to monitor in the session today. HDFC Life, naturally so. After having a brief run-up, the last 2 days were corrective. Yesterday corrected as well. Now we know why. The block deal has been launched. The price band of the block deal is 658 to 678. And Standard Life is the seller, 7 crore shares, worth about 3,000 crores. Every up move of HDFC Life, Standard Life comes out and gives out shares. I should have done the math. Actually, I don't have it right now, unfortunately, or what's the quantum of shares left with Standard Life. But anyways, that's for later. I can talk about this tomorrow. But for today, HDFC Life could probably start off lower. The key is, can it move up? Now, it could move with a bit of a lag. There was a statistic pointed out by one of my team members that after almost every block deal, in fact, 10 out of 10, it's actually had an up move. Now, could it have it this time around as well? Probably could. Insurance companies are a good place. The economy opening up is great. This quarter will be bad numbers. Could the quarter side be good? Probably. Please do your own due diligence before you go out and trade this. Don't trade this on the back of historical, empirical evidence or otherwise. There's a lot of supply in financial names. And keep in mind, SBI cards, ever since the block deal happened, everybody thought, oh, it's a great reopening play. Block deal happened. Now stock will move up. It's stuck in that range, except for yesterday when Nomura came out with a note and the stock did well. So keep that in mind. NALCO. Now look at the numbers. Excellent numbers, by the way, both compared to estimates or on a quarter-on-quarter basis. Just fabulous numbers. You can't really find too much of a fault with NALCO's numbers. The fault that you find with the stock, though, is that it's run up quite seriously in the last 2 sessions. Big, serious up move. However, there are 2 things to this. Metals are in a good rally, good move, and therefore there could be further up moves. There's this whole divestment buzz, which could bring about some uptick in NALCO, you never know. And MOTILAL OSWAL note on NALCO is interesting. They say that we value the stock on an SOTP basis at 5 times FY23 earnings, EV EBITDA, sorry, and 0.75 times book value to arrive at a target of 93 rupees per share at the current market price, which is the current market price at 79. MOTILAL OSWAL believes it provides an attractive dividend yield of 6%. They maintain a buy on NALCO. Let's wait and watch. Like I said, very strong numbers. You can't find a fault. In all probability, it should do well. The only caveat is it's had a good move in the last 2 days. So therefore, you have to bear that in mind. If you're making a fresh trade, if you're already present in the trade, then yeah, I mean, some people could book park profits, or you could stay long because your trading stop losses will be so lower. But otherwise, just be mindful of that. Very strong results by some 4 or 5 mid-cap names or small-cap names. So Tamil Nadu Petro Products, HPL Electric, KCP Sugar too. By the way, the numbers were good. I know some people said that there's a mixed bag. I don't think it was a mixed bag. Very good numbers. So these 3 did well. Sandur Manganese and Graphite India too, I thought had very decent numbers. So do watch out. Some of these small caps or micro caps could react positively. If they do, you know why. It's on the back of very good results that these companies came out with. Some trades that happened over the last few days, the insider trades as get reported. My colleague Darshan Nakwa has put it out in the All You Need to Know copy. I've just brought it out here for you. Glenmark Pharma, Glenn Saldana bought some 7,800 shares on June 23rd. Lincoln Pharmaceuticals, Mujal Patel bought 50,000 shares yesterday. And Man Infra Construction, promoter Parag Shah, who's the sitting MLA from Ghatkopar, has actually bought another 2.5 lakh shares. I think he's kept on buying. I've seen 3 or 4 insider trades reporting Parag Shah having bought shares of Man Infra Construction. Do watch out for this one if you want to do some study on Man Infra as well. So that's the other interesting one. Last but not the least, the street loves being bullish on Concor, and with reason maybe. Morgan Stanley's come out with a very interesting note. They're saying that there's a lower possibility of a smooth ride when it comes to the divestment. I think they remain underweight as they believe that the LLF is not a settled issue, even if the management has said so. That is, earnings have low scope for disappointment, because if they disappoint, then the valuations are so high that the stock could correct. Some issues likely to need clarity before the divestment, and they believe that some of the investors are likely to become likely to hook on short-term gains in the actual event, and they believe that therefore the stock would become a trade on the divestment play. So when the divestment happens, there's a lot of people who would have bought in for the divestment coming out and selling, and therefore there could be some selling pressure out there too. I think their target price is 574 most likely, but essentially a cautious note on Concor after some time. So be mindful of this one as well. Net, cautious day of trade or a quiet day of trade, either way. Maybe some upward bias in select mid-caps as well. Do watch out for some of the result boys. Do watch out for HDFC Live. And by the way, it's the 29th of the month. In a couple of days from now, we'll start seeing the auto announcements. So do watch out for the auto stocks as well. Thanks so much for tuning into the Trade Setup. Have a safe day. And if you're stepping out, please stay masked up.